Then I don't know, Rati, are you, which instrument have you chosen, or you're still?
No, I'm still on V75 though, but
Okay.
if ever opportunities arise on my Crash 500, I'll be there. Crash
No, no.
500 and C1000 in BK2. I'll
Okay.
just be looking. Yeah.
Okay, I know it's fine. So, step index now. Step index, as I said, you need to understand your instrument. You need to understand your instruments. There are instruments that are naturally made to always go up. Not always, but in the long run, always be going up. That's why you see the NASDAQ. Let me just show you the NASDAQ or the US 30, because they are comprised of the major companies in the stock market. So major companies, they're always going to aim to make profit. That is why you see NASDAQ, in as much as there was this drop, but long term, if you check, it's always pushing. These are so many years. So this is a lot of I think it's a year or 2 years just pushing up, without even turning back. Pushing up. So you need to understand your instrument. Once you understand your instrument, why is it always moving like this? So you always need to also search now, why is step index? Because if you check step index, drop, retracement, drop. So overall, it has been a bearish market. So we need to know why. Why is it good? Why is it? Is it simply the way they want to move it? Maybe they want to start to move on the bearish side before the bullish side, or there's something actually that is there that we are not aware of. That is also something that you need to discover now as a step index trader. Since you've chosen step index, it's not a problem. It's good. I don't know the reasons that you made you choose that, but whatever reason, just make sure that you now know your instrument more than anyone. Are we together?
Okay.
So I have this downward trend line, major downward trend line. I'm expecting a push to touch this downward trend line. That would be a most probably third touch. So that third touch, it can actually bring a continuation of this downtrend. Because remember what we always say, that the market is always going to prefer the path of least resistance. The path of least resistance when we are like this is to the downside. When we're in a major downtrend like this, the path of least resistance is the downside. So here, when you come to this trend line, most probably the path of least resistance, which is the path that the market prefers, is always going to be down. But if it does break, that is where we now look forward to the next levels of targets. But right now, currently, that is the the most important trend line that you need as for targets. So if you check, it has been pushing up ever since here, ever since we broke this lower high. Lower low, lower high. So ever since it broke this lower high, this was where you're supposed to start buying, mind you. I know these days you had not yet fully jumped to step. So you're supposed to start buying there after the break of that major lower high. You're supposed to start buying it there. So now let us look at our levels. Let us look at our levels. I have this area here. I have this level of support. Let us also look for other areas. That area as well. Yes. So step index, I think the analysis is so clear. Step index, what I have realized, I once traded step index for a while. I once traded it, And I know some of just a few things about it. One thing that I've realized, you need to be patient with it. And you also need to look at higher time frames most of the times. Your entries, you also need to look 30 minutes, 15 minutes, okay, 30 minutes, 1 hour. Get your entries there. 15:30, 1 hour, 15:30, 1 hour. They're good for your entries. And it needs patience because it likes to consolidate, it likes to range or consolidate or play around before really moving where it has to move. That is one thing that I've realized about STEP. So currently, bullish market, bullish, 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 higher high, higher low. Then here now, that is a lower high, which is lower than this one. So can we say already there's a shift in market structure? We can't really say that. We will only say that once we break this higher low, once we break the higher low, that is where we can say there's now a shift in market structure. Once you see this higher low being broken, that's a shift in market structure. Then what you always want is a retest, then boom. So currently, as we are seeing, it's above our major support, So currently we expect, so here it was something like a fake out, then came back inside the zone. Fake out came back inside the zone, went all the way, then came back for a retest to the area, something like this. So zone, this is our zone, respected, broken, faked out. So after every fake out, remember what we said about fake outs. After every fake out, we always expect the price to come back and do what it was supposed to do in the beginning. In the beginning, it was supposed to go there, come back here, reject here, then go. So it faked out. After the fake out, it has to come back again, touch, reject, then go. So right now, currently, I'm actually seeing this is a rejection. Yesterday's candle, it actually closed with a rejection. That is a rejection, a possible hammer to the upside. So right now, the first target is always this area. Once we break there, we are now looking forward to the trend line. Once we get to the trend line, remember what you said about the path of least resistance. Most probably, if it follows the path of least resistance, it's going to go all the way to the downside, most probably to come back and retest the level here at the bottom. So the analysis is, I think it's very, very clear. So right now what we do, we simply go to a lower time frame, because the higher time frames, what they do, they show the lower time frames what to do. Higher time frames, they tell the lower time frames what to do. So once you have identified your analysis on the higher time frame, you go to a lower time frame and look for entries along that direction. So that is my trend line as well.
Yes, true.
Right, so here we are. Let's see. Here we are. Here we are, right. So this is the trend line. This trend line on the 4-hour, the market is below. What we want now is for price to come back inside the trend line. That is why I spoke of the concept of patience when it comes to step index. It's really a choppy instrument sometimes. You actually need to be patient with it. So here, the patience now, we want at least to close inside for us to take buys. Then for sales, remember what we said. We'll only take sales once we break here, retest this area. That is where you're only going to take sales. That's your only condition for sales. But so far for buys, we want it back inside the trend line. Once we are back inside the trend line, so here came out, went back in, came back down. So here we're not sure, is it going to reject here? If it rejects now, most probably it can come and break there, but we'll simply need to observe and see. But if it closes inside the trend line, that is what we already want. Once it closes inside the trend line, we'll simply take our buys all the way to this first target. First target is there. Next target is the trend line, as we have showed you. So as you can see, this was a push to the upside, upside, high, 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 low, high, high, and high, low. So the counter trend here is this trend line here. So that trend line as well can guide you for your entries. If you enter after the break of this trend line, your trades are much more safer. Your buys are much more safer. After the break of this is a counter trend to the downside. So if you enter after this break, those are trades that you realize that you face little to no drawdown at all. Unlike trying to enter while it's still trying to break. So wait for the break. Once we have broken, you take your buys. First target is there, and next target, the trend line. So that trend line, it can even give you your entries. You can enter 15 minutes, 30 minutes, or even 1 hour. You can enter simply using this trend line. So that is what we're currently waiting for right now. Once we break this trend line, just go to your smaller time frame, identify candlestick patterns. Once you see them, boom, we enter. So that is our current viewpoint. So the concept of highs and lows that we spoke about, if you remember, you also look at it if ever you want. You also look at it. For example, the high of this previous candle. Where is the high of this previous candle? Is here. And we always know that whenever we are uptrending, whenever the market is going up, it forms a higher highs and the higher lows. Higher highs and higher lows. So for us to be safe for buys, it has to come and break this high, which is also where this trend line is. So once we break that high, that is a confirmation, a tick to say we're now going all the way to the upside. That will now be, it will break. Once it breaks, it goes and forms a higher high. Once it comes back, that's a higher low. Do you understand?
Yes.
Higher high, higher low. Then boom, we go. Higher high, higher low, then we go. So that is the current analysis for step index. We'll simply be communicating to see how far it's moving. Then we take things from there. But so far, this is the analysis that we are currently seeing on our step index. I'd say it's a good instrument. If you really master how to trade it, it's also a good instrument. It's also a good instrument. That one is a good instrument, step index. Money wise, it's good. It's good. I've traded it. I've once traded it, and I know that it's really good. And I know you also like things that have money, and not things that. So it's good. It's a good instrument. But now master the instrument. Know it in and out. Know it in and out. What does it respect the most? The other instruments that don't even respect trend lines, that don't even respect support and resistance. They are there. But know your instrument. What does it respect the most? What does my instrument respect the most?
The trend line is this one.
Okay, that's good. That's good. So here we are, here we are, here we are. Bouncing on the 78.6. Good. Good. Point A, point B. Bouncing on 78.6. Once it comes back inside there, which is above the 61.8,